Hello guys. Today's Sunday, so I'm gonna just be reviewing some setups with you guys. I think this is gonna be the last of my videos I'm gonna be sending because I've sent you guys a lot of videos. All you guys have to do is just review and take notes of everything that I've said, so that you guys can get a grasp, into the strategy. So one thing that I forgot to tell you guys is that one thing about your psychology is that you need to understand the psychology behind a winning streak. You understand? That's only admissible by only having a pair that you like trading. You understand? So it means that you have to distract yourself and basically eliminate yourself from trading everything. So one thing that can help you guys is to basically understand one one pair, you understand, one trading instrument. So if you guys like trading gold, trade gold only, understand? That means that you understand how gold moves, you understand what time it moves, you understand when is it not volatile, when is it volatile, you understand, you know what time the news is, because you know that gold is moved during the Asian session. So you know that, okay, you just use time zones, you understand, use time zones to perfectly align yourself at the right time with the right setup, and then you take one trade. Also, the fact that you guys trade every single day is also a really bad thing, and it's bad for your psychology because yes, it's good keeping up with the consistency, but you won't understand why sometimes you win today and then tomorrow you lose. That's because you trade every single day. Understand? There are genuinely things that you have to understand. You understand? Beside the behind the like psychology of not trading every single day. So once you perfectly align yourself with what I'm telling you, I swear it just clicks. You understand? It clicks. It becomes easier for you to not become a chart zombie. You understand? So what I mean by a chart zombie is that you won't be addicted to the charts. You understand? I mean, we come and we learn trading for for basically freedom. But what freedom are you obtaining if you're always going to be on the chart? You stick on the chart, you stick on the screens. You understand? Instead of enjoying your life out there and your money that you basically worked hard to get, that withdrawal didn't come easy. So why are you trading it to make more? Enjoy it, bro. Enjoy it. You understand? Trade less. You understand? These are the type of things that help you with your psychology. That's what they help me with that, you understand? So it becomes easy for me to trade when only I have a high probability setup. So that means that I eliminate myself from trading low probability setups, meaning that I lose less, understand, and I only trade when I'm more confident in a setup, because you can fool yourself when you have a good setup and you know that this one is going to be a good one. And you know that if you're not sure about a setup, then you don't trade it because you're not 100% sure of the narrative that comes with that setup. Understand? You don't just see that, oh, it's retesting, let me just enter. No, you have to frame a narrative, understand what price is doing, and then come back and then understand, create a conviction towards your setup. That way, you know that, okay, you can align yourself with good narrative. You understand? Uh, what else? Liquidity is really also important. So once you understand liquidity, time zones, your turtle soups and all that, and basically you practice how to spot them. You understand? Like you train your brain into identifying a certain pattern. It just, yeah, it just makes sense. So let me just wait for this to load real quick. Uh, let me just wait for this to load. Let's just do this. New, new chart, new tab. and then this. Okay, what's going on? I think I'm just gonna be using trading view. Okay, let's just use trading view. Then so what I'm going to be doing with you guys, I'm just going to be reviewing some like a setup that I saw. You understand? I'm going to show you what I do. And as you can see, is that I only always analyze two pairs with you guys because those are the ones that I trade the most and the only ones that I trade. And you notice how it's currency, meaning that I'm able to win more on currencies than on indices and all that because of the way they move. Currencies, they move slow, yes, but then like you get a good reward with with just practicing the discipline behind it. Understand? You cannot call yourself a trader if you don't trade currencies. Currencies are the holy grail. They're basically the foundation that we all start with. So understand that and know that don't rush yourself into trading Nasdaq because those things they move really crazy and you lose your money if you don't understand what you're doing. The only way you can do that is through consistency and you understand. So let me just begin with Nasdaq, right? I'll just begin with Nasdaq because you guys also trade Nasdaq a lot. So I'm just gonna do one on Nasdaq for you guys. Let's just wait for the charts to load out. Okay, so how do you do full screen here? Yeah, here we go. So okay, let's start with Nasdaq, right? I'm gonna be using 1 month, the monthly time frame, to basically understand where price is at right now. So you see all-time high, it's forever bullish. Nasdaq is forever bullish, right? So okay, what I did right now was I tried seeing a CRT, right, for basically a reversal to the downside. But now, however, you can see right there that what it did was it basically targeted 50% of that, not even 50%, but like it's like 30% of the first candlestick and it reversed back up. That shows you that the narrative behind this was wrong. Why? Let me tell you why. Okay, if you can take a guess then sharp. But like I'll tell you why. The first reason was that I was looking for bearish pressure on a bullish trend. You understand? There was no break of structure, no nothing that indicated that we are now bearish. So why am I looking for bearish setups? You understand? That's how the setup that I had at first was wrong. So you can see right now that there was a CRT that formed, it broke that low into this candlestick. It acted as a Fibonacci gap to basically do what? To go up higher. You understand? So why did it go up higher? It's because it's on a bullish spree. You understand? And this is on a monthly. So I identified my narrative like I always do. Understand where is it heading? What trend is it on? Understand? And I always tell you guys that if it's bullish, it's always rejecting the lows and it's breaking the highs. Now when it's bearish, it's always rejecting the highs and breaking the lows. So it's basically vice versa. But besides that, let's just do lower time frame, go to a weekly, we got our direction, right? So now what do you look for? Higher time frame PD arrays, like your Fibonacci gaps, because you already found your CRT, right? So your Fibonacci gaps, your breaker blocks, your whatnot, they all act as a key level. Understand? But it's fine. You guys already know that. I'm just repeating just so that you have that in your mind and you don't forget that. So let's begin right here. Right here, you can see this long breaker block, right? This one was a long breaker block. As you can see, it reversed back on it. Turtle soup, and it's now going up higher. So my prediction on this is that it's going to break its all-time high again, because that's what it's always doing on Nasdaq. But besides that, uh, because I found my CRT on the monthly, I'm going to be using my daily as time frame alignment, right? So you can already see in that, in the midst of that, I see your range high, your range low. It turtle souped right there, created the turtle soup, and then it created a CRT as well to show you that it's now reversing after it broke the range low to what? Reject the low to basically go up higher. Understand? That's basically what a bullish trend is. It's always rejecting the lows and expanding higher to go break the highs. So you see what was presented there, and it's presented with a CRT, a clear CRT to show that it rejected that low on the daily to expand higher. So that's basically it. So now how are you going to enter it? So just the more you go lower on your time frame, the more better you be able to position yourself to get an entry, right? So let's say right now the weekly time frame, right? We're on the weekly time frame. And then I see that this is the candlestick that I used as my CRT. And then it basically purged. You see these three candlesticks inside, they formed the inside bar candlesticks. So meaning that it, like I said, that is indication that when you see that, it means that there's no volume in the market. As you can also see by the stick and the candle that it creates, there's no volume in the market. There's no movement. So, and it's on a weekly. So for about 3 weeks, Nasdaq wasn't moving properly. But immediately that it got to the CRT low and created the CRT low and turtle soup, that's when it made a rejection, an instant upward movement, right? So look, for our time frame, you get an entry. Where do you get your entry from? Turtle soup, you understand, okay, turtle soup, there's always a false breakout. You understand? So what comes after a false breakout? Manipulation, because you know that it's a false movement, so it's manipulation. Candlesticks that create the manipulation are called order blocks. Like I'm saying it again, they called order blocks. So you wait for the order block to do what? To engulf, to get engulfed. You see, it already got engulfed right here. So your entry is a retest plus a CRT, because CRT is for confirmation. Understand? Confirmation for what? For rejections, reversals rather. So that's what we got there. Highlighted the order block right here, as you can see, and then it came back retested. Inside of the retest, what happened? CRT. There's it. You wait for the CRT to happen, right? You do what? Now you use your 4-hour as your key time frame, and then you use lower time frame that aligns with it to do what? To enter your trade. You see right there what happened. Purged. After it purged, you just basically enter this with this candlestick as the momentum keeps going up with it. It closes the candlestick above here. You could have just entered and then rode up with it. That's basically it. You see, to go take out the CRT high here, or rather from a 4-hour, like you've seen, from a 4-hour, you've seen that we have a range trade. So since it broke that range low, you know that we're going to attack that range high up there. So that gives you the conviction that you need to hold your trade. You understand? So the only way that you're going to be getting a lot of pips, I mean, obviously Nasdaq gets a lot of money, but not all brokers have good contract sizes with Nasdaq. So now what would you be waiting for? You'd be waiting for for your TP to be reached, and it won't get reached now. It's probably in the February or March, because right now it's been consolidating a while. So that's basically it for Nasdaq, guys. How are you gonna catch your entries? Because we moved and we already passed the entry point. CRT, that's all I say. CRT is for confirmation. You just wait for. But before we do that, let me show you guys. Fibonacci retracement, right? Range high. Oh, sorry, this is my. From your Fibonacci retracement, all you have to do is you just need to highlight from the range high to the range low, right? Your premium and your discount. So right here is my equilibrium, right? My equilibrium point, it tells me that the price for Nasdaq is at fair value. Do you understand? So meaning that it's not expensive, it's not cheap. So what likely happens during range trading? You guys know that it always tends to do a reverse. So you only enter your buys at a discounted level, and then you only sell at a premium. You cannot sell when it's at a discount because it's already cheap for us to buy, not when it's too expensive. Okay. So I'm gonna say that again. Equilibrium point shows us that price is at fair value. You understand? It's stagnant, it's equal in value. So you cannot trade at the equilibrium point. How do you tend to trade now? You need to understand, are we bullish? Are we bearish? Right? If we're bullish, we know that we're going up, meaning that we need to buy when we are low at a discount, and we need to sell when we're at a premium, when it's too expensive for us to continue buying. That's basically the whole context behind a Fibonacci. You understand? So these levels, the equilibrium point, is very important when you're doing range trading, because now it will tell you that because look, by just merely looking at this, use your brain, you can see that every time it reaches this equilibrium point, not once but twice, it always rejects and then reverses. Can you see? The same thing is going to happen right now from where we are, because we're at equilibrium. It's going to reverse if the true nature of this range is to expand higher, then it's definitely going to go to the discounted level, so for us to continue buying. Okay, so that's basically it. So now, by the time that it is now deep into the discounted price, you use turtle soup for your entry, order block as your model 1 for your entry as well, and then CRT obviously, well, vice versa, like other way, but yeah. So that's it with Nasdaq. I already put in everything for you guys to see. Let me just delete the Fibonacci because you already know this is the equilibrium point that it's at right now. The 50%. 50% we always take partials, but then I use it a different way. Okay, you can use partials to basically, if maybe let's say you entered 6 trades from the start of this order block, right? When it reaches the 50% of the equilibrium, you just take partials, meaning that you're going to close 3 of your trades and you're going to let 3 other trades run until your final TP. So that's it with Nasdaq. We're done with Nasdaq. Next we're gonna go to EURUSD. I'm gonna do EURUSD for you guys because that's one pair that I trade every single day. Okay, so you can already see I highlighted it. I have an analysis clear ready for me. I'm just waiting for it to basically respect. So like I said, bro, like it's so simple, guys. Highlight with your Fibonacci. After you already identified your range high and your range low, and then you see which side it had broken out of, because you know that if it broke the range low, it's going to reverse and go take the range high, then vice versa with the range high, right? If it takes the range high, it's going to reverse and go take the range low. So you see right here, this leg was my leg, and then it retraced, and then it broke. Turtle soup, obviously. So right now it's what, entry to go take our range high up there. So that's basically it. And I look how I haven't used any CRT, no nothing else. So yeah, this is basically range trading only. Okay. So now since I got my range trading, what I'm going to do is I'm going to understand something. Am I in a premium or discounted or equilibrium? That's very important, because that way you don't just enter blind, because you could enter an equilibrium and it will wipe you out first before basically moving. Because why? We buy when it's at a discount, we sell when it's at a premium. Okay. So let's just do that from my range high to the range low. You can really see from this point that it reacted from this equilibrium point. That's why it started reversing. So that would mean that right now it's heading towards a premium in line with my context of my trade to give us a bullish movement. You understand? That now is me having a trade context. You understand? I have a checklist. My checklist it aligns with everything that I'm supposed to follow, meaning that it gives me more confidence when entering a trade. You understand? I'm not trading everything. I'm waiting for one setup to actually give me everything that I need to wait for in order for me to enter a trade. That's me having discipline. You understand? Discipline and not trading every day. That basically everything I was saying in the beginning of the video. This is literally what I'm trying to prove to you guys. But yeah, let's move on. So range trading, it does false breakout. You understand? False breakout, that means manipulation. Manipulation candlestick creates the order block. Order block, there's it, the black candlestick. Where is it right now? It's at it's heading towards it. Yes, but it's on a 4 hour, so that means that we might have to wait half a day for this setup to actually go to our entry point. By the time that it does that, once it comes into the order block, you only wait for your CRT, because now order block entries sometimes tend to consolidate. You don't just blindly enter. You understand? It also depends on how long the order block stick is, the candlestick. So now, if you wait for a CRT, it basically removes you from waiting. You understand? That way you enter at the start of the volatility. Because why? CRTs, they confirm reversals. Okay. So that's about it. You wait for the order block, CRT in the order block. Since you use the 4 hour, you use 15 minutes as your time frame alignment to basically get a trade. So now here's the thing now. Here's the thing. This is today's Sunday. Markets are closed. Monday, price action moves different. Okay. What do I mean by that? Opening price. Like I told you guys, by the time the market opens, right, it always needs to take out liquidity at first. So what is it going to do? It's going to do open, high, low, close. Open, low, depending on what structure it's in. So as you can see right now that the market is here, right? What you need to do is, since it's a Sunday, you mark out the last price movement, which was on Friday, okay? So that means that the new week is on Sunday. You just highlight that. So now, what do you wait for? You wait for the market to open on Monday, right? What do you need to wait for now? You go to your 15-minute, market opens here. So that would mean that for it to expand higher, it needs to go low first and then expand high. So what is that? That's open, low, high, close. You understand? So that's basically it. You use that. You don't just blindly enter, because market is going to take you out. Liquidity first before the movement. You understand? So by the time that you get that, you understand that, okay, by the time this thing does the open, low, high, close, it would have already went lower to our entry point to expand higher. And that's it. You just enter and then you don't look at the charts. You just let it do what it has to do. You set your stop loss, you take your profit, you understand? And you just leave. Then that's about it. Probably I can do one last pay for you guys, but I think that's about enough. Let's check USD JPY maybe. So you know correlation. Correlation with USD oh, this one already reached TP. Correlation with the USD, you know that if Euro USD is going to be buying, that means that Euro USD is going to do the opposite because of what? Correlation. So no guys, I think that's about enough. 2 is enough. I'll just make more videos if I see more setups. Right now, we have a buy scenario, obviously, because why do I say that? It's because of this weekly CRT. Like I told you guys, that it's gonna react from that fair value gap. It did that, closed inside. So that would mean that this candlestick is gonna be our new CRT, CRT high, CRT low, to basically do what? To go expand higher, to do what? The range high up there. Because you see, I told you that it's not gonna hold for too long, this fair value gap. So that's when you're going to be expanding higher with it. So you use that weekly as your CRT, meaning that the opening price, let me just delete this. And then we're yeah. And we're gonna highlight it real quick with the horizontal ray because I don't have time. Highlight this like this. This is your CRT high, and then this is your CRT low. Right? This on a 4 weekly. That means my time frame alignment is my 4 hour. What do you look for? Model 1, order block entry. So what happened right here? We got a turtle soup, right? We got a turtle soup. So turtle soup entry, right? Missed that one, obviously, because you wouldn't have seen that. So the last candlestick to have broken the low is this order block right here. You can also use this as your order block, but let's use this big candle because it has more liquidity in it. You can see that it closed above it. So opening price, what is it going to do? It's going to expand lower and then up. That's basically it. You see? That's about it, guys. That's about it. Mind you, you guys need to practice. Ask me questions if you need to, but yeah, so far this is about it. I'll see you guys back in March, June, around those times. Alright.